Okay, so that's the end of the first phase, which are the presentation by our panel members. So now we have a Q&A session. If you would like to ask a question, please raise your hand and wait for the microphone. Don't be shy. Well, if not,
we'll start it.
Okay, so I'm going to get started with the questions. I'm going to speak in English.
If I may. Principle is harder because we're talking about blurred stuff like scenarios, or it's not numbers, it's much more hard to transform it into a model and things like that. So how to transform this in an asset allocation or in asset selection, how to, even more considering the lack of good information?
Well, the first thing, if an investment manager says, I haven't got enough data, I say to an investment manager, you make investment decisions every day with imperfect data, go away. That's an excuse, not a reason. Okay? So that gets rid of the data problem. At this point, as I learnt over lunch, may not be so clear in Chile, but in many countries, asset owners are a very separate entity. I think in Chile, with the 5-7 funds, the sort of asset owner and investment manager function is closer together, I think, than in many countries. And the argument to an asset owner who is sitting there doing strategic asset allocation, and I need to get a little bit technical, so strategically, lean into a better beta. People tend to think that market returns are a given. They're not. Investment managers pretend they're very clever and deliver those returns, but let's not forget that capital market returns are probably 85%, pick your favorite large percentage, 85% of the annual return. So investment managers have got very little to do with it, so focus on capital market returns. So begin to think, I highlighted the Moving Beyond Modern Portfolio Theory book, begin to think, and I tend to focus on climate. In fact, I sometimes say ESG X climate is as useful as stamp collecting, and I'm a philatelist. So focus on climate, and which risks do you want to lean into, and which do you want to lean away from? So some large pension funds in the UK have actually said engagement with oil and gas companies does not work. We do not want our beneficiaries' assets to be invested there. So some pension funds are exiting the oil and gas sector. So you have to think strategically that capital market returns are not a given, which we've believed for 3 or 4 decades. And I tend to tell the story, some of you may know the investment manager Baillie Gifford. They bought Tesla many years ago. And it comes to a really important point about repricing risk in markets. Everybody says, you're mad, Tesla's far too expensive. They said, no. We think markets will reprice risk, and Tesla will be favored with the reprice of risk, and we will make lots of money. Now, asset owners don't think like that, historically, but asset owners are beginning to think in a sort of slightly more capitalist way than just an administrator. So I say strategic asset allocation is preceded by strategic risk management stance. That's exactly what USS started doing last year. That paper is public. They wanted it to be a public good. It's hard to say this as a co-author, but it's a world first. They wanted it to be out there to help people. And where it's gone in their next phase, which is a bit more confidential because it's very much particular to that pension scheme, is they've started using things like heat maps. So directionally, where do we want to go? You see, we're still sort of keeping away from numbers for as long as possible. So directionally, in our strategic asset allocation, which sectors do we favour? One thing you find is that private markets may be more attractive because you used to think they were risky, there wasn't much data. But if in fact we are going to crack this climate problem, and it's not guaranteed we will, then some things that yesterday I thought were a bit expensive, actually maybe not quite expensive, I want to invest in them. So there's a start. I'm just going to add one point which picks up the taxonomy point. This is, I'm not sure if it's advice, it's a comment. Be very clear to separate societal risk, which is the role of governments, and I was actually deeply encouraged by many of Carola's remarks. I wish our government in the UK was quite as joined up. Governments and non-financial regulators regulate risk, so defence, health, all the usual things. Finance just does financial risk. I was a little bit worried when you talked about the private sector getting involved in the taxonomy, because I think the taxonomy should be societally, what do we like? The EU made a bit of a mess of this. Many years ago, they set up a high-level expert group of sustainable finance people like me, and we got together and decided that we didn't like, I wasn't part of it, we didn't like nuclear, gas was a bit of a problem, so we gave a financial answer. What happened when that got to the politicians? Well, the French said, we love nuclear, so don't say nuclear's bad. The Germans said at the time, we like gas, we like Russian gas, so don't say gas is bad. And there's a really big difference, which is not that well understood, that the role of governments is societal, and finance just operates within that. So if there's one thing I'd like you to remember tomorrow morning when you wake up, that's one of them.
Any question from the audience? ¿Alguna otra pregunta que salga? Just one thing to mention when you talk about the traditional portfolio theory and the prospective risk management when we are dealing with climate change. I think we should tackle also this.
Well then, absolutely. Accepting uncertainty. You remember my first picture of the Earth Doctor and the rest of us on the right-hand side? And it was in one of my questions this morning to a panel. Finance thinks it's got risk, I was going to say taped, that doesn't translate well, sorted. We think we've got risk sorted, we can measure it. But actually, when you start thinking about it, we look at the past, we look at data. Past data isn't risk, it's outcomes. And that's really hard because most of finance is very driven by past data and pretends it's risk. And building on an earlier comment, and I commented about, the Minsky moment. So here's the second thing I'd like you to think about tomorrow morning. If policy is weak, and again, I was deeply encouraged by the Chile comments, thank you, Moreno. It is possible that financial markets will just start repricing risk. They'll say, you humans, you haven't done enough, but we finance people are running away from all the bad risks, and there will be a sort of global financial crisis, COVID, Ukraine moment, because financial markets price risk. And if they don't like the look of, I could talk about climate tipping points that we're heading towards, markets are just going to reprice risk, so get on the right side of that. So I think just thinking it's hard. We haven't thought like this. It's really hard. But just thinking about the pricing of risk in capital markets, how governments frame that, and we operate within that, that to me is at the heart of it. And then one can begin to ask questions, well, what does that mean in practice? And that's what USS are doing right now. But it really is leaning to risks that I think will be rewarded.
We know that in Europe they have like 50 people in the ESG teams that support actually climate scenarios, stress tests, and all of things like that. We learned, I think it was like 1 month ago, that Citibank has their own climate scientist, for instance, that I think we are far from that. And considering all the regulation that is coming, even the green taxonomy that probably will influence our investment decisions in the future as well. So how can we cope with that, with all this overwhelming information that we'll probably have to do at some point, probably in the near future, to actually cope with the sustainability issues that we are all facing, especially with climate change and the loss of biodiversity?
Yo creo que la mejor persona para primero abordar esa pregunta sería Lizeth
person
mismo,
to address that would be
el contacto que
Lizeth
tiene con
because
un número
of
muy
her
grande
contact with the
asset managers, asset
vast
owners,
number
no
of
solo
asset
en un
owners and
país,
asset
pero en toda
managers,
una región,
not
y
only in
contacto
her
con
country
una
but in an
institución
entire
global como el
region
PRI.
in connection with
Gracias.
a global
Y hace unos
institution
minutos,
such as
justamente antes de
PRI.
empezar, estábamos
Before
hablando
starting, we were
precisamente de ese
talking
tema y de las
precisely about that
diferencias
topic and the
que hay entre los
differences
equipos de ESG en la región
among
versus
ESG teams in the
otros lados del
region
mundo, que
compared
muchas
to
veces
elsewhere
todos
in the
estos temas de
world.
sostenibilidad los anexan
Many
al área de
times,
riesgos o al área de
these topics
inversiones,
are in the
pero no
investment or risk
existe como tal
departments,
una división
but there's
propia
no specific
dentro de muchos de estos
division or
equipos.
department
Y
for
esto se
these
presenta pues
topics.
precisamente
And
como
this
una
is
dificultad o una
mainly
limitación
considered
en
as a
temas de recursos,
limitation in
tanto
terms of
financieros como
financial
humanos, para
as well as
abordar
human
todos estos
resources
temas.
in order to
Y
address these
precisamente pues
topics.
a cada uno de los
And
puntos que yo tocaba
one of the
durante mi
topics that I
presentación es
covered in my
precisamente todos
presentation
esos temas
is
colaborativos.
those collaborative aspects. One of the principles in PRI is how our signatories work jointly, understanding all these limitations and that many of the problems of our signatories are common to all of them. Many of the companies they invest in are common. So precisely all those collaborative initiatives come up as a solution to these topics, and especially those that are much smaller, that have resource limitations, help them reduce their costs to be able to relate to companies and to make progress in all these topics, addressing common topics that may be systemic to all investors, strengthening those skills or capabilities and their investment risk models and their best practices. We can all work collaboratively to address that, and that has been the spirit, I would say, or the philosophy behind all the things that we are addressing from PRI. Mike asked for the floor as well.
one of the things that I say to questions like that goes like this. Nature has been sending us invoices for years, and we've thrown them in the bin. So when people say, I can't afford that, they sometimes don't realize they've incurred the cost, just not paid the bill. So part of this is actually committing more resources to what is probably the existential problem, and realizing that that's just what we need to do. So we need to do more collaboration, more resources. Have a look at it like this. And this is picking up on your sort of unfair Western versus developing countries point, which is crucial. If you go back 2 COPs, they set up a loss and damage fund. I describe the loss and damage fund as the claims department of the notional global insurance company. All claims are ex gratia, because clearly the Americans would never let them be legal claims. Over time, there'll be a feedback loop. I hope you're all systems thinkers. There'll be a feedback loop from the claims department to the underwriting department of the world's notional insurance company, and we'll realize it's doing a very bad job. There'll be a feedback loop from there into national insurance companies. And we'll actually realize that we actually need to spend resources that we think we had a choice about, but we don't. And I go back to the sort of nature could put us all into chapter 11, which could be tricky. So I think there's a lot of rethinking. I spent much of the last few years sort of rethinking how to think about this stuff. And I think insurance is important. I had the privilege of attending the IAIS, which must be the International Association of Insurance Supervisors, the other day. And this is because the actuarial work that I put on the slide, a colleague had presented the Emperor's paper. I came later and did some other work. It is very clear that the insurance supervisors, A, rely on the NGFS scenarios. That's not good news. Secondly, there is very little appreciation of systemic risks, because if you're a regulator, you regulate companies. You don't necessarily think about that. So there's a lot of rethinking to do around how we see the problem, because until we've rethought it, we won't make the right decisions. Okay?
Gracias. Quería quizás dar una mirada un poquito más como institucional y de cómo a nivel internacional se manejan.
Internationally, these things have been managed. And it's, for example, the Paris Agreement of 2015 has an article that allows for the trading of certificates, if you wish, in between countries, in which those who are countries that are able to sequester carbon or are able to mitigate can issue a certificate and sell it or trade it. The need to generate that market so that there is information for that market to operate is one of the ways in which we can help mitigate emissions globally. And it's very important, again, to consider what I mentioned at the end of my presentation. That is a global issue, but the loss of biodiversity is local and is as severe or even more severe, because loss of biodiversity means that all ecosystems are less resilient to climate change in general, and therefore risks of flooding, for example, are much larger everywhere. And that's when it makes it much more difficult, because it will not only be you'll not only be trading permits against a country or to a country that is not necessarily interested in protecting wetlands or a forest. That is the biggest challenge, and the role of multilateral entities is to create funds that can fund resilience in countries that cannot do it, with contributions from those countries that can actually make those contributions, and also with loans that are low interest loans. a country that may receive that money at low interest rates and that they can actually lend it to the private sector, but as a soft lending initiative, so that the private entities may reduce their risk for investing on projects that are in the long term or that have a high risk because of the fact that they are subject to the impact of climate change. I think this is not only about collaboration that is needed, which is also beneficial, but there's also awareness of the fact that that's needed for everyone. And I always think what Mike says, what are we going to do tomorrow and what are we going to do better tomorrow? That's the question. I believe I'm not trying to be that negative, but every day that goes by, there's less probability of a tomorrow. So I believe there's a sense of urgency that we all need to have, and it's very important to consider. But so that we need to make it very obvious to each person, each institution, each company. There's less probability of a future. Very briefly, I think multilateral institutions play a key role. We've seen that the issues about information is quite limited. One of the things in which we can make a huge contribution is to provide good quality information, best practices. I'm not working in these projects, but the bank gives me. A colleague of mine, Manuel Garcia, is working on ESG as well, in which sharing information, producing information is key, and I think it is a very important role that we play, because as we showed it and somewhat covering the presentation, information is key, and lots of the deficiencies that exist are associated to information.
Markets, I do worry if that is finance greenwashing society. I may be biased because I'm the seed investor and investment manager whose first and currently only fund, it's been going for about 4 years, invests in ETS, emissions trading scheme allowances. They are well regulated, governments are involved, there is oversight. If you look at the voluntary carbon markets, and in fact we're going to touch on this tomorrow when I speak with the regulators event, if you emit some emissions which might last 100 years, and the price of an ETS allowance is, pick a number, 40 euros, but you can buy a voluntary credit for 3 euros, but in fact, the tree may disappear in 10 years, but you say, well, I've offset my emissions. So I think there's a really tough question. I was told by somebody the other day, this may not be the case, but I was told that Mark Carney was a great fan of these, maybe moving away from them. So I think there's a real issue about voluntary carbon markets that is worthy of a discussion. So I just wanted to pick up on that point.
Yo solo para agregar un punto adicional y creo que
Just to add something specific, and something that is important is to also involve the executives of the companies and members of the board. In Colombia, we did an exercise to educate the members of the boards, and when they were asked what were their knowledge regarding ESG, close to 80% of them, they said they had basic knowledge about it, and that's when the whole issue of strategy and implementation of these topics starts in organizations, in terms of asset owners and pension fund managers. They don't understand really the importance of these topics in the evaluation of their assets and their portfolios. So I believe a very important exercise is to train and educate the members of those boards around these topics, and not only the professionals that are operating on a daily basis in these topics. There was a question, I believe. And there's another one back there. Good afternoon. My name is Patricia Nasser. I represent national ONT, unions, or workers' union organization. I came here in order to gain knowledge about what it means to manage pension funds. And one of the things that I've heard here today, and that resonates with me, is that the lack of knowledge about how pension funds are managed by the members, by the workers in the end, is close to 100%, I would say. So I think that is significant to me. It's a significant factor. Is it the case? Is it so? Is it a problem? Is it important? Something that needs to be addressed? Who should be responsible? So the workers are more informed and educated about how pension funds are managed. Basically, these are funds that come from our own work. Well, that is my question. Maybe Waldo can address that, because that's part of the study that IADB is running. I want to talk about the importance of education of members, of contributors to pension funds. And I fully agree with what my colleague said here. If we have lack of knowledge, lack of information of the people who are managing investments, what is the case of the beneficiaries? I believe there's a unique opportunity to connect the ESG agenda with the beneficiaries in the pension systems. How can we establish that connection, and how does that connection help us for the beneficiaries to have more ownership of their pension system? The data that I showed is that people do not know. Even the data that are shown also exacerbate the true level of knowledge. There is international evidence. I'm not talking about Chile in this case. There's international evidence that people all over the world do not really understand or know of pension systems. And it's not a surprise at all. It is important that in ESG there should be an effort, and this goes back to my previous question. I believe the multilateral institutions have a role to play in how we can communicate ESG aspects to beneficiaries, simply for them to have more ownership of the system, and in this ownership to feel that pension systems are more adapted to the beneficiaries, because there's lots of criticism around them. Education is key. It's key not only for the beneficiaries but also to the people who manage the funds.
I would like to make a comment about ESG specifically. In our regulation, we have the need to publish a report, a management report of the funds, that it's done a year at the end of the first period. So I think that we're going to have the third version soon. And it deals with the management of the funds in terms of risks and how risks are included. It goes beyond ESG. I mean, it includes climate change and risk management. And it's quite an important document in terms of education, to educate on how management takes place. All administrators publish that, and I think that it has improved over the last years. And we have the expectation that it's going to be even better this year. But we just verify, we just make sure that this is done according to the regulation. And this includes that this report needs to be easily accessed in the website, for instance. So it's easy for people to find it, and that people can better understand how management works. On the other hand, I would like to mention that the financial knowledge on top of social security, it's considered to be low in most countries, and Chile is not an exception. But we are fighting against that. But of course, I mean, and we're going to continue working on that, of course. Now, Mike.
that because as I'm learning, I think I'm right, and I'm looking at Sergio, in Chile, the asset owner and the investment manager function is a bit closer together, if that's right. So there isn't quite such the clarity between asset owners and investment managers because of the system. So this is how it works in the UK. The UK is a very financial economy, and finance tends to exclude climate change when it's hard to deal with. So there are lots of citizens who are concerned. They could be beneficiaries of pension schemes. There are lots of non-governmental organizations who are sort of activists who are helping to teach them. So we now have the situation where beneficiaries come to the meetings, mostly in the public sector, of the asset owners, the pension fund board, and they ask lots of really sharp questions, and I help them. And so they ask questions of the people at the top of the tree who drive the process, and I think it's probably clearer outside Chile how the asset owners are really the people we have to empower and modify. It comes back to the gentleman at the end of your row talking about skills and competences and resources. So the citizens who are concerned challenge the fiduciaries, the trustees. They drive it through the system, through the investment managers who invest in companies which come back and affect citizens. So I think in a sort of system sense, there is great scope for helping and picking up Moreno's comments. You know, Chile citizens probably get climate change more than the average citizen around the world. So finding ways that they can contribute to the acceleration and increasing the agency. I sometimes say, I've come here today just to increase your agency so you can increase your agency in your networks tomorrow. So thinking in a sort of system sense, how we just accelerate, and I think it comes to the point that citizens are in a very good position. You'd have to adapt it to the Chile situation, but they're in a very good position if they've got the time, the resources, and the willingness to sort of help drive change to the system, because no part of the system lives in isolation. Thank you.
Yo quisiera añadir un poquito a lo que dije anteriormente, no solamente la falta de conocimiento de los beneficiarios, sobre todos los temas de ESG, sino también del lado de los administradores. Como pude ver, yo mostré muchos datos.
I showed a lot of data, and there was just one in red, which reflected that 1 out of 4 administrators has specific regulation in terms of how to disseminate information to their members. 1 out of 4 out of the 100 largest pension funds. So we still have a long way to go, not just when it comes to the knowledge of beneficiaries, but how the information is communicated. Hello, good afternoon. I agree with most of what has been said in this panel session, and I would like to ask you how we can, even if everything that it's been, we've been talking about the future, but there's still a trade-off between the short term and the long term. In general, costs are paid in the short term, and the beneficiaries or the lower risks are seen in the long term. So I'm wondering how we can manage the portfolios today, considering that may have trade-offs, returns, or even a free rider. You may expect for someone else to pay the costs or receive the short-term returns and then be able to migrate investments once they are liquid. So I would like to know what's your opinion in terms of how we should approach that kind of dilemma in terms of transferring the risks or wealth over time. Can you please, we haven't met you, so can you, I'm Maria Alicia Montes, and I work in a pension fund company called Cuprum here in Chile. I think that the answer it's quite complex because it covers most of the topics we've discussed. I think that it was already mentioned that tomorrow is here. I mean, we're already late when it comes to climate change. So now, considering that, maybe we can focus on the short-term and long-term answer. So, Mike, if you may.
Manager, or do you think you're an asset owner? I think you have to choose, and I mean, this is something I've been learning about Chile in the last 24 hours. If you're an investment manager, you'll operate as an investment manager running money. Modern portfolio theory will be there, you'll be alpha, beta, tracking area, capital asset pricing model, all the stuff we learned at school. Although I'm an actuary, so I didn't learn it till later. If you're an asset owner, and I mean, I know Chile is reviewing the whole pension system, and I asked a few questions over lunchtime to try and understand what was going on. If you're an asset owner, you're driving the investment management process, you're much closer to your beneficiaries, you have a longer time horizon, which is why I asked you which you were, and if you're both, that might be a problem. I'm not advising the Chilean government, but I think the separation of those two roles is quite crucial. I asked a question, I don't know if you're in the room, I think it was the last session before lunch, where we had BlackRock selling a product as an asset manager, Nest selling a project as an asset owner, and that draws out the tension. The former will be very financial, very capitalist. Mark said, you know, the asset owner is going to be there because we can do this cheaper because we're not for profit. So I think there's a really fundamental question, which is asset managers will be shorter term than asset owners, and conversely. And you begin, I mean, it's hard to give an answer in the Chilean context because my sense is they're just very conflated together. And I do wonder if one of the evolutions of the system will help to clarify that asset owners are closer to citizens, closer to government, closer to worrying about societal risk and opportunity and where they want their money to be invested in for 30 years. If you have a competitive asset manager market, that's about managing money day to day better. That's not what asset owners do. And that may sound a bit weird in Chile because of the conflation. So it's a pretty bad answer. But what we are finding is that the climate change investment problem, and this is in various countries around the world, it's not an investment problem, it's a governance problem. Because governance decides how you frame decisions, and because investment management is framed by modern portfolio theory that sort of doesn't work as I sought to describe, you have to go above that and say, how do we think about the investment process? And I'm suggesting that asset owners gather citizen savings and pass them to investment managers to manage shorter term, your short-term point. And those to me are quite different, but I'm conscious it's a pretty bad answer in a Chile context.
¿Alguien quiere complementar algo ahí?
Would someone like to add to that?
Yo entiendo
well, I understand that point because we actually have here in Chile we play a double role here actually. So they play the role of the asset owner in terms of macro asset allocation. But on the other hand, they also play the role of the cherry picking. So they work on the day-to-day, but also they work on the long term. And of course, that creates that sort of conflict, which is highlighted when you have short-term cost benefits in the long term. But that's the context we have here today, the environment we live in, and the solution needs to be given or created here.
As investment managers, I'm going to make life a little bit complicated and talk about governing fiduciaries, who are the asset owners, the board, managing fiduciaries, who are their executive, who behave like an asset owner but are investment savvy, managing fiduciaries, and then investment managers who are operating fiduciaries. And what is happening in the UK is that it comes back to the earlier question, where there is a well-resourced executive that thinks like an asset owner and does strategic asset allocation, CUSS, but there are plenty of other schemes. Well, no, there are a small number of schemes with a good executive resource. Then they operate strategically, and the investment manager manages portfolios on a short-term basis. So there is a big push in the UK. We've got far too many schemes. We have 5,200 defined benefit schemes. There is a big push by the pensions regulator in the UK to consolidate, because what you can get with consolidation is a board that runs the operation, an executive that is investment savvy but thinks longer term like an asset owner, and then I'm sometimes slightly rude about investment managers because they're only 15% of the answer unless it's passive when there's zero. So you get this focus on capital markets I've talked about, which is strategic and asset owner. And I just wonder if, I mean, this is just a question really, whether the reformers in Chile will move towards recognizing that difference. I just don't know. But I think that's part of it, that there's two different jobs. One's gathering money and being wise and strategic, and others just managing portfolios, which is just, a day job.
¿Alguna otra consulta allá?
Sí, gracias. Paulina Granados, de la
Superintendency of Pension Funds. I would like to know whether there are any countries that has been more aggressive when introducing ESG criteria. Of course, it's clear after what you've said that there is an important trade-off between costs and benefits because of the direct costs and because of the long-term benefit issue. And there are important barriers, so if there is no taxonomy, we cannot move forward towards the implementation. However, when it comes to pensions, I mean, this is quite a different industry because it's mandatory savings. So it seems to me that we may have more room for the regulator to make this kind of mandatory criteria, considering that we know that we're maximizing a strategy, a long-term strategy in a long-term horizon for people to have better pension funds or better to receive better pension tomorrow. So I'm very interested in knowing why we're so cautious. I mean, where is the tipping point? If we think about Chile, or if we think about how we move from incentives to stop people from smoking in hospitals to the prohibition or the ban to smoke in hospitals, I see quite the opposite is happening here. It's sort of like we are fostering ESG criteria, and when the world is burning, only then we're going to move to actually including ESG criteria when it comes to pension. I don't know. So, well, I would like to know whether you could elaborate on this and whether there are any countries that has been more innovative, perhaps, or who has made this mandatory. Okay, I'm going to be talking about this tomorrow more specifically, in terms of policies about this. around the world. So in Latin America, the approach of many countries such as Chile, Colombia, and Mexico is that the pension funds or the investors are general when integrating all these risks when it comes to sustainability. So they establish criteria, terms, or strategies, or for them to establish certain metrics and to disseminate the information using international standards. However, in Europe and the UK, they've gone a little bit further, particularly Article 8 and 9 of the FDR regulation standard. It establishes that they need to set goals related to sustainability. So they take one step further, and the strategies they have need to be in alignment with those goals. Similarly, in the UK, they've developed initiatives or regulations aiming at these goals, so that it is more mandatory, so to speak, for the funds to do this, considering the role they play within this ecosystem. So there are regulations that move them in this direction.
ESG is not a thing, it is not a noun, it is an adjective that should only be used with the noun risks, if that makes sense. So the UK, in my view, has over-delegated the role of government and non-financial regulators of finance. Finance cannot solve all society's problems. If you take the US, to your point, I mean, we've started a sort of political war because there's a lack of recognition that climate risk is both important strategically to investors and to governments as protectors of citizens. So we now have two tribes that says there's no common ground. All this ESG risk is sort of woke and nonsense, and that probably tends to be one political party's position, and the other people who say, well, this is the most important thing in the world, we need to do something about it. And it comes, I think, to this fundamental point that societal risk and financial risk are different. So the EU got itself in a bit of a twist. I talked earlier about the high-level expert group. It's that financial people effectively solve a societal problem. Article 6, 8 and 9 funds are trying to combine the two, and you probably know more than me about the fiasco, the problems that's caused, because in one way you can't combine the two. If you move on to ESG ratings, is an ESG rating a metric about real economy things like women on the board, diversity, tax, and real economy stuff, or is it financial risk? Well, I take the view, if I'm an asset owner, I'm a pension fund, I don't really want my investment manager outsourcing a financial risk view to an ESG rater. I want him to be on the hook for financial risk. So I think a lot of these questions are because, well, I think we go back to President Reagan's phrase, the nine worst words in the English language are, I'm here from the government and I'm here to help. And we need to stop that. And our Prime Minister, Mrs. Thatcher, said there's no such thing as society. So during my working life, I think more and more has been delegated by governments. And I'm very encouraged by sort of Chileans got governments working across departments, which is not really the case in the UK. So I think we're sort of getting to the heart of a problem where governments do one thing with non-financial regulators. There was a very good question this morning from the lady on the third row, and I'm going to turn it into a question for this panel. In the UK, I've described what's going on with pension funds. We have some crazy things being done by most of the market. Go back to my pink slide. And we have some wise things being done by people like USS. Now, the pensions regulator is actually a financial regulator, so they get that. So they're managing financial risk because, I mean, again, the mandates in Chile may be different, but at the heart, it's financial risk, and governments do societal risk. And because the UK pension funds have highlighted this problem, it is possible that the pensions regulator effectively, because it's going to agree with the pension funds on financial risk, could upset the Bank of England, because the Bank of England regulates banks and insurers and is still slightly in NGFS scenario land. So the financial regulators regulate financial risk. We've got a government that is backtracking on its climate commitments. So there's a big tension in public administration between financial regulators who are notionally independent, that's how we set up the system, and the government that is basically backtracking as fast as possible because it's got a whole load of people who sort of behave a bit like ex-President Trump.
A modo de ejemplo de un esquema de pensiones,
by way of an example of a pension scheme,
yo quisiera dar el ejemplo
I'd like
en el documento salen
that in the
varios
document
países, pero
there are
quizá uno de
several
los países que
countries, but
destaca
maybe
es
one of the
Australia.
countries that
Australia en el
stands
año
out is
2013
Australia. In
la autoridad
2013,
regulatoria
the regulator in
en el
Australia
2013 ya
in
comenzó a
2013
formalizar la
already started
incorporación de factores y
formalizing
los fondos de pensiones. La regulación venía de antes del
because the
2013, pero
regulation
ya en el
dated
2013 hubo una
before
formalización
that, but there was a
y han
formalization
aplicado
then,
medidas
and
muy
they have
estrictas
applied
para que
very
los
stringent
fondos de
measures so that
pensiones
pension fund managers do introduce them. In 2019, a regulation was issued that establishes that pension funds should be proactive in introducing these factors and not to expect regulation to demand that. So they should introduce it even before regulatory aspects were applied. So I think Australia, when somebody talks about a country that has been demanding in terms of introducing ESG factors, I think one example is, or a role model is Australia. Now, if you allow me, I'm going to change my role as a chairperson to defend a position to a certain extent. And I believe in Chile we have been innovative with the risk-based supervision in investment processes and decision-making. For many years, we've been assessing sustainability criteria in the investment process. It wasn't part of the law, it wasn't mandatory, but in the superintendency there was already a vision that those risks were relevant in how pricing was done for the assets, so it was already driven, and that was formalized in the last few years. And then after the Green Agreement, that was a part of the regulation in a way that is very smart. I don't know if Patricia Ayala is still with us, but I believe they did a very good work in the Regulatory Development Division, because it doesn't demand to do it, but it has to be assessed in the process, the decision-making process, evaluating sustainability risks and also climate change risks, like any other factor. The decision will be made regarding the relevance in each one of the investment efforts, but it needs to be considered. So it is. It also considers that there are difficulties in terms of information and heterogeneity, and they will do the best with what they have. And it's sad, but I think it's the end of the segment, which is awful. And I wanted to thank everyone who had the energy of withstanding after lunch of a panel of this size, and each one of the panelists that took part in this panel. Thank you very much. It was extremely interesting to me, at least. I hope for you as well. And I'd like to thank the organizers of the event once again.